Hello everyone, it's Evan here from the Trade Risk with another edition of Stock Market Weekly. We're coming at you on a Sunday. We're a few days late. I'm going to keep it brief. Had a busy weekend, so a rare sort of miss and delay from our usual Friday evening, Saturday morning schedule on these recordings. But we're going to jump into it here. A very eventful week in the market, so let's hit on some of the key takeaways and thoughts heading into next week. So first and foremost, just to run through the index performance here, you can see just a sea of red led by the Nasdaq 100, down 5.36%, one of the worst weeks we've seen in quite some time. You can see 1 month returns all in firmly negative territory now for all the US averages. Take a look at our volatility indices as well. So you got the VIX now pushing up towards that 20 level, and the Nasdaq surprisingly is not higher, but north of 20, 23, up 2.5 points, heading into a busy week for earnings. So we're going to talk about some of those stocks in just a second. Let's jump right into the some individual charts here. So last week we had, what we called basically our chart of the week, right? We said, well, look, if there could be any chart of the week to pay attention to, it would be the Nasdaq 100. And the reason for that was because of this very orderly, sideways, congested, sort of overlapping range. And when you get this type of consolidation, when you get especially a more volatile either asset or market index or instrument, you will get that vol expansion, you get that breakout out of the range, and that's why we like to look for these types of sideways ranges. We don't really try and predict which direction we're going to break. So last week we weren't saying, oh, it's definitely going to be a breakdown to the downside. We did not know. This could have easily, resolved up if circumstances were different, but we do know that volatility is likely to increase. We're going to get a directional move in range and a trending move, and that move was to the downside. So we marked our levels very clear last week, basically 433, the low of this range, the entry into this gap, and we, really just from a textbook perspective was a classic sort of breakdown here. We had one little hesitation day, which maybe threw some folks off of the scent here on Tuesday, where the Nasdaq 100 tried to look like it was maybe going to be a false breakdown, a fake out to the downside with this little slight, kind of green candle here. But we basically printed a bearish engulfing day on Wednesday. And then we sank down, filled the gap, and proceeded to sell off lower. So our chart here, or our roadmap from last week, really kind of setting the scene nicely here. Breakdown set the tone for really this week. The Nasdaq 100 again down 5.39%. And the way I'm going to look at this here is if we switch over to, say, the NDX index and we zoom out a little bit, this starts to get a little interesting as we go all the way back to the late 2021 highs of the Nasdaq 100. So I would say now when you start to look at a longer term perspective here for this market, so the longer term swing traders, position traders, trend followers, this is now the big area that I would be paying attention to is, can we sustain and hold above the 2021 highs? It feels like we want to go and retest those levels. A retest to me is not a problem. It's a fact if we fail, close below, weekly sink back below 2021 levels, and now suddenly we're going to be left with a little bit more damage than certainly I would like to see. So this is would put us about a 10% correction here from the all-time highs if we came back down to this 16,600 area. So keep that on your radar. At this point now, it's only another 500, 400 points, which is 2.5% lower. We could be there on Monday if the ranges keep up here. So let's pay attention to this level. You can see there's some January pivot low here, and there's a little bit of previous price action in this area here, even on the daily chart. So that's what I'm going to be watching. That's the kind of the goalpost I'll be paying attention to. We have to keep in mind that we are coming now into a very busy week for earnings. So we have Tesla, which maybe some people are already kicking out of the Mag 7 acronym, but here with Tesla, we had a 14% down week. I know there were some layoffs and some other things happening here in this in this stock. I didn't follow it too closely, but certainly this has already deviated much differently than all the other mag 6 stocks. It has been in its own kind of pullback and retracements off of its highs for quite some time. But this reports earnings. This is going to set some obviously potential here in EVs just generally, but also just a small look at the consumer and seeing where that demand is for their vehicles. We also have Meta, which is going to be reporting this week as well. This is one of the best, strongest relative performing Mag 7 stocks. You can see, though, not immune to a little bit of weakness here. It's about 10% from its highs. It's got a big old gap here. So, certainly with some of this weakness here and everybody on edge, this is a big gap that we want to pay attention to in Meta. They're reporting on Wednesday. We got Microsoft and Google, I believe, both on Thursday. So Microsoft now coming back into this kind of intermediate term lower end of its range. We'll see if buyers can show up. And Google holding up pretty well on a relative basis here. You can see they pushed above the 2021 highs. This was sort of the late start for the Mag 7. They really got their act together in the last month or two, and now you can see holding up pretty well in this market weakness. So let's keep an eye on those earnings. Remember to check your dates on any of your holdings. We've also got inflation, PCE data. I believe it's PCE coming out that the Fed is certainly going to be looking at. So let's also pay attention to that next week. And semis, we can't leave this video without looking at semis here. So down 10%. This is a pretty substantial weekly down week, increased volume here, certainly breaking this intermediate term trend, the slope that we've been in since the fourth quarter of 2023. We are now in this kind of correction pullback mode here on this longer time frame. So that was, I believe, ASML kind of giving their cautious guidance here was some of the big story and causing some of that breakdown. You also look at something like Nvidia here, which is the heaviest volume it's seen on the downside since the March 8th candle here, which I believe was earnings. And you can see this is now in pullback mode, weekly chart, starting to put in a little more breakage here on some of that longer term trend structure. So the market fully in pullback mode right now. The question is, how contained can it be? We have lots of moving parts right now with, of course, the geopolitical or, kind of the stuff overseas. And now we also have inflation data that's remaining sticky. Now we have earnings, data coming up. And then soon the market will be looking at the US election. So plenty to chew on right now. And let's take a quick tour on the VIX here. Up briefly north of 20, but closing below 20 and sub 19 going into the weekend here. So we'll see if earnings can at least put the market sell-off into a pause mode and we wait to some of these big companies report. And that might be, kind of the next few days here as the market maybe catches its breath and waits to see how companies are actually doing in this environment, and most importantly, what their earnings expectation or their guidance is. So that is some of the takeaways from last week, some prep for next week, lots to chew on here coming ahead of us with earnings and everything else. So let's stay sharp. Hopefully everybody managed the volatility okay. Hopefully we're looking at some of those Nasdaq levels, the clear range breakdowns, and we're able to avoid or hedge some of the damage or at least be prepared for it. So that's it. Short video. We'll be back on our normal schedule next week. Take care. Hope everybody's doing well out there, and we'll see you back here in the next video.